Hello and welcome to the another episode of our Biz Talks. I am your host Shweta and with me today I have here our leading advisor Miss Mayuri, which will guide us on the taxation in the UAE. So the topics that we are going to cover today are the corporate tax, the VAT and the entire taxation policies which are very important and mandatory in the United Arab Emirates. Hello, Miss Mayuri. Welcome to our podcast. So let's begin with your valuable guidance.
Thank you, Shweta.
So starting with our first question, what exactly is the UAE corporate tax? What are the basics of corporate tax? Who needs to pay the corporate tax and who is exempted?
So, corporate tax is on your income, basically, and it's on your net profit. It's a direct tax. It is recently, corporate tax was not there before. It is recently introduced in UAE. And it is on the net profit. It is on the company, not on individual. So if a company makes a profit which exceeds AED 375,000, which is equivalent to 100,000 USD, then the company has to pay 9% corporate tax on above this income. So all the companies is eligible to pay this taxation, which is 9%, and there's no slab. It's just 1%, which is 9%. So all the businesses in UAE has to register for corporate tax and they have to pay corporate tax if they exceeds this income. Talking about the exemptions, there are so many industries which is exempt. For example, like I'm just giving one or two. So for example, government entities in extractive business, and there are some government controlled entities, provided they have to report, they have to notify it to the Ministry of Finance. So this is just some list. There are many more lists who is exempt. Apart from that, so if someone is exempt from corporate tax, they need not to register for it. But apart from that, all the companies who have a license in UAE, they need to register for corporate tax.
The second question would be, many of them are confused, like what is Freezone tax, what is Mainland tax? Can you specify the difference between them?
Good that you asked this question because I thought I missed this in my previous conversation. So yes, when you talk about free zones, mainland, so when it comes to UAE, we have different jurisdiction, as you know that. So we have free zone, we have offshore, we have mainland. Corporate tax has nothing to do with it. Yes, it has to do with it, but there are some myth among people. Even I have came up to so many clients, they say, I am free zone company. Why am I supposed to pay corporate tax? So it's not like that. Everyone is subject to corporate tax, whether it is mainland company, whether it is free zone company, or it is offshore company. Everyone is subject to tax because this is not based on your sales or anything. This is actually on your profit. Now elaborating more, mainland, they don't have any exemptions. So mainland, for a mainland company, 9% straight away. But when it comes to free zone, there are certain benefits that the tax authority have came through. Again, this is something which needs a clarification on the basis of the business activity. So the ministry have decided, they have listed some activities, and if a company is doing those activities, then they are subject to 0% corporate tax only if they take care of the other conditions. Now, when you say the activities, this is for services. Again, there is a list. So I'm just giving one or two. For example, fund management company, logistic company, and financing company. So these are the companies. There are others as well. These are the companies wherein if you do this activity, then you have that one tick to go and check if you are 0% or not. And when it comes to service, this is for the services. And when it comes to goods, if you are a manufacturer or if you are a distributor. Now, when I say distributor, it means B2B. So if you're a distributor and you are located in a designated free zone, again, if you go to FTA guide, there is a list of designated free zones. So in that case also, you can make that first tick to become eligible for 0% corporate tax. Is this enough? No. There are other things as well. So One is you should have your substance. Now, if you say substance has so many definitions, substance has definition called the physical office, active employees, capital expenditure. So if you have all that thing, then that's one criteria. Then second thing, you should have your financial audited prepared. So again, free zones, yes, they can check if now free zone, even if you're free zone, that doesn't mean you're exempt from tax. You can avail 0% benefit, which is called a tax holiday. So you'll have to check which free zone you are in. If you are in goods industry, if you're in services, no matter which free zone you're registered with, we'll only have to check your activities. If your activity is listed, then you have to check whether you have a substance, whether you have financial audit, and all this thing is to be like there. And for the offshore, again, same thing is applied. I also want to clear one more thing, that even if you are qualifying free zone, you're offshore, the registration of corporate tax is mandatory. The filing of corporate tax is mandatory. How much you're paying, 0% or 9%, that is decided based on the tax assessment. Oh, that's great. We understood a gist of corporate tax. Now moving on to the VAT, value added tax. Can you explain like who needs to register for the value added tax and what is the process of the registration? Okay, before that I would like to give a brief idea about what is VAT. VAT is basically value added tax, which is an indirect tax on the goods and services. So the payment of burden of the tax here lies on the seller, not the buyer. For example, you're buying a goods from me. So I'm your seller. I will give you a goods. You'll give me the money, whatever is the price, and I charge you VAT. We'll talk about what is the rate. So I'll charge you VAT. So the government will come and ask me. I'm responsible to pay this VAT to the government, not you. You're responsible to pay me. I'm responsible to pay to the government. And it's in the value that I'm giving, the value of that particular goods, if it's a physical good or a service that I'm giving to you. So this is the concept of VAT. Now, it is not like corporate tax. Like I said before, corporate tax, everyone has to register. VAT, everyone has to register? Simple answer is no. VAT has certain criteria, certain do's and don'ts. So in order to understand that, we'll have to first assess what is our business. When we talk about goods, so there are certain cases where we need to register and there are certain sales turnover. So, for example, you are a business person and you're selling, let's say, a mobile phone. So this is a good, right? And your turnover is less than 375,000 AED. So in UAE, their favorite number is 375,000 UAD. They normally go with that. So when it comes to VAT, if your turnover, which means sales, if it is more than 375,000 AED, you have to register for VAT. If not, you will get a penalty of 10,000 AED. And you need to register within 20 working days when you have crossed this. It can be with a single invoice, it can be a sum of all the invoices. Last 12 months is seen. Now, if you see, like for example, there are clients who need the VAT registration for so many reasons, but they don't have the sales turnover. In that case, they can go for a voluntary registration. So 375,000 AED is a mandatory registration. And before that, if you want to register, you must have a minimum turnover of 187,500. And when I say turnover, it's sales. So you must have that turnover to register for VAT. That's a voluntary. Nobody will come and ask you, you have to register. You will not be penalized. But if you wish to register, you can. But yes, you should have this minimum. Again, question comes up. You have 375,000 AED, but are you still eligible? No, because when it comes to goods, we need to see what's your business model. There are customers or there are traders, not customers, there are traders who is doing business, who is doing trading business. They're actually not shipping anything to UAE. They are doing high sea sale over the port, overseas, and Exempt. So many different countries give it a different name. So let's understand this with an example. So I am buying from you. I'm buying from India, let's say, and I'm selling it to Europe. The physical goods are not reaching the UAE port. You're not clearing your goods from the customs. In this case, you are exempt. You don't have to register for VAT. It is not exempt. It is called out of the scope of VAT, which means that you're not eligible to register VAT at all. You don't have to register because there's no goods that you are entering. So you're not using the UAE land for it. So that is clear. Now, let's say you're importing your goods from India, you're taking it inside UAE, and then you're keeping some goods in UAE, or maybe either re-exporting it to an outside UAE, or you are selling it in the local market. In both the cases, you need to register for VAT if you have that turnover that I have mentioned. So, because you're using the UAE land, you're basically using that port area to clear your goods. So, in that case, you will have to take it over. There are other things also, like if you're importing your goods and you have to pay VAT there, and if you have a VAT number, tax registration number, which is called a TRN, you can submit it at the port so that you don't have to pay the VAT. That's basically called reverse charge mechanism. I'm not going more towards it because that would little be complicated. This is not something which is basics, but yes, that's also something which is very important for the companies who import goods. So this is about goods. Now, when I talk about services, you can't see service. Your clients might be outside UAE, inside UAE. So when it comes to services, in that case, the place of enjoyment of the service is seen. So if you are if you're giving your service to a client who is based outside, but where is the client enjoying this service? Is it outside UAE or inside UAE? In both the cases, the registration is mandatory, but we have to decide what is the tax rate. In VAT, there are two types of tax rate: 0%, 5%. 0% is export. Export of goods, 0%. Export of service, 0%, which means your service is enjoyed outside UAE. If your service is enjoyed inside UAE in terms of services case, then that is 5%. And you're selling your goods to the local UAE clients, then you'll have to charge them 5%. So this is all about the registrations and all. And once you register, you will have to file your VAT return every quarter, wherein you report your sales, your purchase, and you net it out, and you take the input tax credit, and whatever is the excess, you pay it to the FTM. So this is a basic understanding, but this is not enough. If there is something which your business is complex, you should always go for a VAT assessment before making any decision, because anything goes wrong, the penalties are very high.
Now, coming to the important question, what exactly is the compliance requirements in the UAE? Do businesses really get the penalties if they are not compliant?
So when it comes to penalties, it has different penalties. So for example, again, it's a list of penalties. I am just briefing one or two. So if you miss to register for corporate tax within 90 days, now when I say 90 days, it's not 3 months, it's 90 days, because some months may have 30 days, 31 days. So when your license is issued within 90 days, if you don't register for corporate tax, the penalty is 10,000. And if you don't deregister, if you don't register for VAT within that days, 20 working days of reaching that threshold, it is again 10,000 AD. If you don't deregister the VAT, so we've not covered the deregistration. So VAT is also supposed to deregister. So if you don't deregister it on time, then you have another 10,000 penalty. If you don't file your VAT, for the first, it is 1,000, then it increases. So penalty has a big list, again, depending on what nature of mistakes you have done, basically. Yeah.
Are there any taxes on the personal income, rental incomes, or maybe capital gains, crypto gains in the UAE?
One thing that I love Dubai is I don't have to pay anything tax on my personal income. So whatever I earn, whatever I have, it is in my pocket. It's in my bank account. I can do anything in that. So to cut it short, there's no income tax in UAE. Personal income tax, okay, because corporate tax is already introduced. So when you can you can earn any amount of money. So in the corporate tax law also, there are 3 things that is not subject to taxes. One is wages. Second one is personal investment. So you don't have to pay any tax on your salary or any income, any interest, and anything. And also you don't have to pay any any tax in the capital gain. As of now, in UAE, capital gain is also exempt from tax. And when it comes to crypto, So I cannot give a single answer on that. Crypto, there is tax, yes, but for that you'll have to go for a detailed study, like what type of a crypto business you are doing. You're mining, you're trading, you're doing it in individual capacity, you're doing it in your company's portfolio. There are so many things in that. So I would recommend the people who have the business in digital asset like crypto and other things, they must visit a tax advisor to get a tax assessment and make it right in order to avoid penalties and also any kind of compliance issue.
So moving ahead to the next question, which is very common because we have been getting the inquiries from our audience that they wish to come to the UAE, start their own business, but they are afraid of the taxation in the UAE. Like if they at the first phase of their company, they are not going to start a very big company. It's going to be a small business. So is there any exemption for such companies, or is there any relief for such companies wherein they don't have to pay the taxes?
Okay, so obviously UAE, when UAE introduced the corporate tax, they never had this idea of leaving taxes on people, making them uncomfortable. No, not at all. Because UAE had a pressure from the other countries because of which they have introduced this tax. Otherwise, they don't need actually. They are very liberal on the tax system and all that thing. And they invite people, they welcome people, they welcome tourists. So this is an investment hub. So but very nice, it's very good thing that even if they introduce tax, they have given so many relief for small business, for medium enterprises, and even for big MNCs they have given. So one of which is called small business relief, so which is termed as SBR. So in this SBR, it is more focused towards small and medium enterprises. Well, in the initial your questions, I answered you that if you have a net profit of more than 100,000, you are eligible to pay 9%. That's one part of the story. But if your total income of the company, now when I say income, don't confuse, your income is everything. It's not just sales. You have this thing, you're selling this, you got profit, that's also your income. You have any fixed asset which you sold and you got money from that, that's your income as well. So all the income, including the sales, if it is less than 3 million in one financial year for 3 years up till 2026, then they have given an exemption that you don't have to pay any tax even if your profit exceeds 100,000 USD. That's a good thing, of course, because SMEs, they have started business, they might not have this much of turnover. Sorry, they might not have that much of income, but sometimes they can have a profit in service industry. All your cost is your profit sometimes. So yes, for them, this is a relief. If it is less than 3 million, you don't have to pay any tax. However, when you are filing, since this is your first corporate tax filing, you should be very much sensitive at the time of filing. Because so many people I have seen, or when I have received DMs, I've seen that, okay, it's small business relief, it's a simple tax, we can directly do the nil tax. No, don't do that, because if you choose SBR, you should be mindful that there are certain limitations as well. If you have loss in your company and you choose an SBR, can you carry forward this loss? If you have any interest which you've paid or received, can you carry forward this if you were chosen for SBR? So again, you have to be very sensitive at the time of choosing SBR. In order to save SBR, in order to avail this SBR, or in order to save some time and just filing the nil return, you should not do it without a proper advisory, proper assessment, because your first return decides your future transactions. So I always tell this to my clients, to everyone, not just my clients, to everyone, that don't do anything just to do a nil return. So SBR, it's a good option. It's a very good option. But you should always understand there's small limitations, not big. Of course, for small and medium enterprises, this won't affect. For them, it is not a big deal. But just I'm making it very clear to all my viewers about it.
What, according to you, is the biggest mistake that the new business owners do when it comes to the tax planning?
Okay, so I always say this, tax planning is always good, but you should make it a tax planning. There's a difference between tax evasion and tax planning. Your tax planning, it may be tax evasion to the government. So you should never do that. Your tax planning should always be very prompt. Here, when it comes to tax planning, you should be aware about what are the expenses. Of course, that's what tax planning is. What is your deductible expenses? And there are so many clients I've gone through, they'd say that they put so many things in entertainment expenses. But are they aware that entertainment expenses cannot be claimed fully? One very biggest, what I can say, the people what they are doing is, okay, I am earning 100,000 profit. I'm earning 200,000 profit. I take it as dividend. I don't have to pay tax. This is the biggest myth that you're doing, that you're taking, and biggest mistake that you're doing. Because it's not that if you're taking your full profit as dividend, you don't have to pay tax. This is not a good tax planning. Dividend means after tax. A company can only declare dividend after paying tax. And if a company is declaring an interim dividend, then still at the time of calculation, it is subject to tax. So you pay the tax, then you withdraw dividend, or you withdraw dividend, but still you have to pay tax. Second thing is, I can withdraw I cannot withdraw dividend, but I can withdraw any amount of salary. I can keep I'm the shareholder of the company, I'm the director of the company. I can withdraw 100,000 per month, then I don't have to pay because salary is a direct expense, so that reduces my profit. Answer is yes, but in the corporate tax law, there is also one thing written that you have to do it as per the arm's length principle. You cannot take any number of salary in order to avoid tax. Again, the tax authority check all this thing. So when I say when you plan your tax, you should always plan in a way that whatever salary you're keeping, or director's remuneration, manager's commission, this is all different terms of the same thing. So you should be very much clear about this. Are you doing this as per the arm's length principle? So there are benchmarks which is set for this salary and all, which you have to again go to an expert, take their advisory and understand how much salary they can withdraw. Is it as per the arm's length principle? Otherwise, to save this 9%, you will end up paying 90% of penalties. So never take a decision without an advice. That's a very important tax planning thing. And then obviously we have good thing as well. When it comes to deductions, we can plan how we do that how we take it forward. And when it comes to the profit, like even if you pay that profit, because when I say that, when we say that there's no personal income tax in UAE, for example, I'm from India, and let's say I am a tax resident in India, so UAE won't charge me income tax on my personal income in UAE. But if I'm a tax resident in India, definitely Indian Income Tax Authority will ask me to pay tax because India follows global taxation. So there is also that particular time also we need this tax planning, because India, why should I pay tax in India? I'm earning here. So that is how the tax planning work. How do we invest it? How do we plan it in a way that you're not even taxed in your home country? Not just in India, in UK, US, everywhere there are tax. So again, that doesn't mean that you evade the tax. Whatever you have to pay, but you can always plan. You can always structure, wherein you can always decide how much you can save. And it's a very good idea. So yes, in order to do a tax planning, you should always understand either you are a tax expert or you should go to a tax expert. That's my advisory to all the viewers.
What is your number one tip to stay compliant?
Do your registrations on time. First, understand your do's and don'ts. Understand what are the tax compliances in UAE, what are the financial compliances in UAE. When I say financial compliance, so UAE compliance is not just limited to taxation. You have your AML, you have your CRS, FATCA, so many things are there. So you should make sure that the company that you own in UAE, you know what are the compliances. So understand your compliances. Don't miss any deadlines. No matter if you have a business, you don't have a business, whatever has to be done, do that. So again, registration, and one important thing, maintain your financial books of accounts. I've seen so many cases where the client says, I don't have any business, then why should I do this? What should I do in this? But no, this is very important. Because when I say that I don't have a business, I'm self-declaring it, right? There's no books to it. There's nothing written to it. When you go to a doctor, no, not a doctor, you say, I don't have diabetes. How will I believe that? Okay, give me the report. Show me the report. The doctor will ask you, right? Your report says you don't have diabetes. Okay, then I'll believe. Similarly, the tax authority, they won't believe that you don't have anything, you don't have a profit, so you don't have to file corporate tax. No, you don't have it. Okay, prove it. So here your reports are, your profit and loss, your balance sheet, all this thing is your report, your audit report. So always make sure that you have it in place so that there's no problem tomorrow. And again, I would say that don't take any decision just on the basis of what you've heard and what you've read. Always take experts' advice to do any kind of to take any sort of decisions.
Thank you so much for all the important information regarding the UAE taxation. I'm sure our viewers must be having a lot of doubts regarding the UAE taxation. So where can they reach out to you?
So they can always reach out to me through in this video. They can comment me, and we at RadiantBiz, we have a team of tax expert. I myself is a tax practitioner. We have chartered accountant, ACCA, CMA. We have a big team of taxation and financial compliances, and we take care of everything. So you can drop your queries in this comment. You can reach out to me through social media, through our website, obviously. And yes, we are always available for. And as I always say that before deciding anything, always take an expert's advice, because your today's decision can be your tomorrow's outcome. So that is always better to get an expert advice. And this is something which we have discussed about the basics. There is always a detailed study when it comes to each business units. So yeah.